Hello, everyone. Thank you for allowing me some time to share some thoughts on the economy and the housing market with you. I will try to condense because I understand that you are running a little short on time and all the installation. I always appreciate all the work the volunteer leaders do for the association, both at the local and at the national level, because we want to ensure from policymakers they focus on the real estate. So what are my thoughts regarding 2020, the year of surprise on many fronts? We had the presidential election, Supreme Court justice, the pandemic. I mean, so many surprises in 2020. And for the better, the housing market actually is one of those surprises, in my view, because in the midst of a pandemic, the housing market is actually soaring. And why is that happening? I will go into the reasoning. Let me try to put the PowerPoint up on the screen because as an economist, I speak a little better with the PowerPoint screen. So bear with me as I upload. And I wish I was there in person. I visited Albuquerque, I think 2 or 3 times. Every time I go there, I always enjoy. And of course, I have to get that Tex-Mex, the overall Southwest meal that you offer with the green and the red sauce. So let's look into the broader economy. So this is a GDP growth rate. And President Trump, when he came into office 4 years ago, he said he wants to get the GDP up to 4%. And 4% would be considered a very good rate. During a recession, it may go down 1 or 2%. What this chart is showing is that we encounter an unprecedented off-the-chart movement in the GDP. In the second quarter, due to the lockdown, it fell 33%. Then as the economy began to reopen, the economy grew by 33%. Swings like this, we have never ever seen in the economic numbers before. So again, you can see from the chart how off the chart figures these are. Now, you may say we went down 33%, we are now up 33%, so we surely must be back to normal. Answer is visibly, you see people are unemployed, so we're not back to normal. But also, if you happen to have a high school age student in your family member, give them this pop quiz. Assume you have $100, you lose 33%, then you gain 33%. Are you back up to $100? And the answer is actually no. And just do this calculation, I guess, afterwards, but it doesn't actually come out back to normal. And it is clearly reflected in the job numbers. So this is the US jobs picture over the past 20 years. If you look at the middle of the chart, that small little hump that you see, hindsight is 2020 vision. And we know that job creation during that time was artificial, led by subprime lending. Give loan, overstretch people's budget, don't check their income, and then it imploded. So we had the foreclosure crisis and the economy went down. But from the low point in 2010, America experienced the longest economic expansion ever, 10 straight years of job creation. President Obama, President Trump, 10 straight years of job creation, amazing growth conditions. Just for other people's hearing, I think there's 1 or 2 person who may be accidentally unmuted. So if you could check to assure that you are muted so we don't hear the background noise. So he said 10 straight years of job creation, but in April of this year, all that undone in a single month. 10 years of job gone in a single month. But as the economy reopened, you see that jobs are coming back, but we are only halfway there. We need another 10 million job creation. Let me compare the US with Albuquerque market. So this is the job situation. I put that red line as a reference point from year 2000. So let me just go back. So this is the US, and this is Albuquerque. So the pattern looks similar, but one big difference is that you are consistently a little above that orange line, which means that the foreclosure crisis that you experienced, it was difficult, but it was less harsh compared to the rest of the country, certainly in terms of the job impact. And then there was a 10 straight years of job creation, and you see the lockdown, and now jobs recovering, and it looks like you are almost back up to normal pre-pandemic levels. So at least this chart shows Albuquerque doing better compared to the rest of the country. But the statewide, it is not the case. So if you look at the New Mexico statewide, it is down 6.9% from 1 year ago in terms of total jobs. And you see other state performance. The nearby state, Arizona, down a little bit. Utah, actually, they're almost back to normal. Texas is doing a little better. But the New York State, for example, it is down 11% because Governor Cuomo imposed a much stricter lockdown for a longer period. So you cannot get economic activity with a strict lockdown, but Governor Cuomo wanted to contain the spread of the virus. But in Utah, they're hitting an all-time high in terms of the virus, but they want to get their economy going. So these are the tough trade-off that every governor is making. Interestingly, all 50 states had low unemployment rate before the pandemic. Now, because of the pandemic, you get different job market performance, often related to governor's decision on opening or not opening the economy at a certain time period. The GDP is lower, again, the economy, but the overall income situation now is actually higher than before. And this is thanks to the stimulus checks, the $1,200 check, the enhanced unemployment benefit. Hopefully some of you tap into that resource during the lockdown period. And there are small business administration loans, which you do not have to repay if you meet certain criteria. So all the stimulus measure has provided an income boost. You may say it went down in the latest quarter, but this is still above 1 year ago. So the second quarter was the massive stimulus. Third quarter, not as much, and now it's beginning to fade out, which is the reason why in Washington, just why I am in Washington, Congress and the White House are trying to determine if there should be another stimulus package very soon to get the money out to the people. So they're still negotiating on that front. What are people doing with this stimulus income? And they are not spending that money. First, you cannot go to any sports games. Going to the restaurant, people are hesitant about the virus situation. So people are saving their money. So this implies that once the vaccine becomes widely available, and we know it's just right around the corner. America is making great progress on vaccine discovery, just right around the corner. There could be some unleashing of the savings into the economy and get the economy really pumped up in 2021. Now, this is on average. I know there are some families who are living week to week that have pretty much depleted all their savings, but here's the average picture for Americans that their savings is actually higher now compared to before the pandemic. Turning to the good news, the remarkable housing market. So home sales went down during the lockdown, but when it reopened, what a surprise. People are looking at record low mortgage rates, buyers rushed in, maybe some apartment dwellers said, no, I need to have single family, I need to have a backyard, I don't want to live in high concentration apartment where there's more likelihood of catching COVID. So home sales really increased, just soaring, even higher than 1 year before. What about new home sales? Similar picture. It is up 40% from 1 year before. So whatever the builders build, they can easily sell it. Pending contracts, up about 20%, which means that this winter would be one of the best winter months for home sales based on pending contracts. It's very strong activity and very good news for realtors. What do realtors also say to their clients, prospective buyers? Well, demonstrate seriousness by getting a mortgage. So consumers are taking out mortgages. So this is a pattern for mortgages. During the lockdown, it went down, but now you see that mortgage application is up 20% from 1 year before. The early spring months of next year will be one of the best spring season ever because there are plenty of buyers in the pipeline ready to hit the marketplace. Very good news for the housing market. You see that little arrow at the beginning, that's in 2018. It shows sort of a downward pattern. Let me go back. Here's pending contracts going down in 2018. New home sales going down. Existing home sales in 2018 going down. So what was happening in 2018 to make the housing sale activity a little softer? Well, regarding jobs, it was part of that 10 years of job creation, strong economy. But what was happening in 2018 is that mortgage rate increased from 4% to 5% to indicate how sensitive the housing sector is to changes in mortgage rates. The fact that we are facing record low mortgage rate is the key reason why we have surging sales. Again, housing market, very sensitive to mortgage rate changes. And consequently, with the buyers coming in, median home price in Albuquerque well past $250,000 mark, but this is still below national average. So someone who bought a home 10 years ago, they're doing very well in terms of equity gains. But given that Albuquerque home prices are a little below national average, I think there is a potential for catch up. And furthermore, as I will go into later slides, the affordable market, I think, will benefit over the long haul as people are seeking more affordability from work from home phenomena. Rising prices have greatly increased housing equity. So the top line is housing asset valuation in total. Bottom line is the total mortgage outstanding. The gap is the housing equity. Hypothetically, if there was a slight price decline, there's nothing to panic. Homeowners have sizable equity to work with. I am not calling for a price decline, but even if there was a price decline, most homeowners are in comfortable situation. But what is constraining the market condition right now is we simply don't have enough inventory. I think many of you will say that if you had 2 more inventory, you can easily do 2 more home sales. So we need more inventory into the marketplace. And how do we get more inventory? We need to build more homes. This is housing starts, new home construction. The reasoning for the record low inventory condition is that home builders have been below average for the past 10 years. Cumulative effect of being under average for the past 10 years is that we simply don't have enough homes for sale. We are facing housing shortage. So we need to build more homes in order to bring more inventory to the market. Furthermore, building more homes means help to the local economy, but the builders are saying lumber prices have essentially doubled, making it very difficult to build a home. So we need to consider all efforts to see what can be done to reduce lumber prices, including possibly reducing tariffs on Canadian lumber, bring more Canadian lumber in, maybe will make it easier for builders to build. And the builders building is a local job creation. Another part is that the job losses that during the pandemic is primarily happening in the hotel industry and the restaurant industry, hard hit. The finance and insurance, office workers, they're fairly immune. And if you look at the green bar chart, what you see is that leisure and hospitality, where the bulk of the job losses were, those were low-wage industries. So you can say that it's really the people in the low-wage industry really took it on the chin in terms of job losses. But note that construction wages pay much more, and we need more construction workers. So is there a program to train people to go into construction and possibly bring more inventory to the market? Just one anecdote, I saw it on CNBC story about a New York chef who lost a job, decided to go into construction, getting much higher pay, but the person said he never realized how happy it is to work outdoors. So it's just an anecdote, it's not a statistic, but at least that could be some good story about people who have lost job going to construction make more money, and also helping the economy because we need more construction workers. Now let's look into the work from home and change in location preference. Office demand is falling. First, companies who are struggling, they're going out. Second, companies who are doing well, they're not leasing new spaces. Why should they? They're having their workers work from home. So office occupancy is really falling. So commercial members who are involved in office transaction, feel the pain for our fellow commercial members. And we also took a survey of realtors about their clients' residential choice. And people are indicating suburbs. They want to live in the suburbs, rural area or small towns, away from city centers. City centers should generally be about 1/3 of the market, but look how low it is now. Resort communities should be less than 10%, but now 13%. And in fact, we see this pattern. Counties that is considered vacation counties are seeing greater increase in home sales compared to other normal counties. So work from home can also be work from vacation home. How would the boss know? Or why would the boss care? As long as you are working, whether it's from home or vacation home. So people are beginning to buy home along all the vacation resort areas. So the forecast that I have is that in 2020, we are undergoing a recession, the middle column. By 2021, things will turn positive, especially with the vaccine availability. Interest rate will continue to remain low. So the housing market is positive job with low interest rates. Everything will turn positive. Middle column, 2020, pandemic. Housing market outperformed last year in the midst of the pandemic. Then in 2021, it will continue to show growth because again, job creation, low interest rate, but also from second order housing demand coming from work from home. People are trying to reshuffle where they can work from home, and Albuquerque may benefit given you are more affordable. People living in Denver, prices are 2 or 3 times as higher. They may say, hey, why don't I go down to Albuquerque where things are much more affordable and I can buy a larger size home if I can work from home. So you may begin to see some of this trend. My final slide is this. I think President-elect Biden will occupy the White House 99.9% chance. President Trump has all his right to look through all the legal channels to see the fraud, the integrity of the election. But assuming it is Joe Biden who occupies the White House, he has introduced few policies. First, $15,000 homebuyer tax credit, and it will be available at the closing table, which in essence becomes a down payment assistance. So some of the renters who want to buy, they have the income but no down payment, maybe this is a great help. But remember, the demand for housing is very strong now, so it's just further adding fuel to the fire. 1031 exchange, Biden wants to remove it. So we will be communicating with the Biden camp to say how important 1031 is for commercial real estate, especially to turn land into developable lot so the builders can build more, we need more supply. So we will be doing a lot of education to the Biden camp to say, don't remove 1031 exchange. Joe Biden will likely appoint Federal Reserve governors who believe in a looser monetary policy in order to bring the unemployment rate down. But we may have future inflation. And if we have future inflation 5 years from now, you want to have a tangible asset like real estate or gold. So the other part is Biden is likely to introduce a larger fiscal stimulus package and maybe even extending the mortgage forbearance period. I hope he doesn't do a nationwide lockdown because this will just simply kill the economy. Any temporary localized lockdown, I think that makes some sense. But a nationwide lockdown, I think it could be quite devastating. But thank you for allowing me some time to share some thoughts with you. Overall, housing market outperformed this year and the momentum carrying on into 2021. So thank you.